It is Monday, the 19th, the 19th of September, and we're looking at NASDAQ. I'm going to be trading the RTH trailed stops framework today, which I can see with a bit of clarity, a bit of narrative behind what we might do. So got a few lines in the chart already. I've already done a bit of an analysis, but I'll walk through first what the model is and then explain what I'm seeing. Essentially what the model is let's say we're having a gap up like we are today. So a gap, if we closed on Friday here and then we open up, we're having a gap down and then we gap down and open at 9:30 here. What I want to see is us first engineer a high, entice shorts, and then attack that high, and then likely also go to any further targets. The daily chart has a long wick plus displacement, which is a high time frame bullish signature suggesting very strong order flow, and we're going to be having a gap down. This is the close from Friday, as you can see there, and we're going to be gapping down and opening at 9:30 roughly around here. Now so the first thing for this model is you want to know gap up or gap down. We have a gap down, that means we're looking for a long. Now we want the regular trading hours and the electronic trading hours narrative to align with that model. So in this case, the narrative in the RTH was that we were enticing longs, then we had a bull flag, and the bull flag broke out just before the close. So all weekend, everyone saw that we closed at all-time highs, super bullish. Just after a bull flag played out, we had support at this 800s level. So you can know for sure there's going to be a significant pull of sell side down below this bull flag low, which I've marked out. Now, the electronic trading hours narrative, if we look over on the 15-minute charts, you can see that we opened up, we left smooth highs. We're actually leaving smooth highs during the overnight, not taking out any of the Friday buy sides, and then sold off with this aggressive drop lower at 3 a.m. If we zoom in a bit, we can see we've got a really obvious impulse high here. We then rallied up, fell short of taking that out, balanced all of this inefficiency, and sold off again. We then climbed up again, balanced this inefficiency. These are the signatures that lead to a low resistance liquidity run. So I was actually hoping this would happen more closer to the open, but it's interesting to see how that plays out really nicely. Now, the reason I have this bull flag low marked out is because I want to see that hits during the regular trading hours ideally. We could just keep pushing up from here, but ideally if we don't hit this pull and we drop down back below the bull flag low, I would classify that as a good enough for liquidity to be hit for a buy. I've also got this marked out as well because this is a long wick on the hourly charts. I've put the 1 hour down in this corner. You can see a really nice long wick, relatively equal lows on the 4 hour as well. And I'd expect this to potentially be a breakaway because of that daily signature. So we could drop down to this low as well. That's a possibility. But in keeping with the bullish order flow and the fact that we've just dropped below a significant sell side pull in this area, I would expect us to continue pushing higher from here. So when we open up around about here, I want to see us first sell off below this low, then rally up and potentially reach up to this high, but at least reach that 3 a.m. high. That's the minimum. Jumping over to the ETH, you can also do the analysis on the hourly opens. You can see that we're at a deep discount below midnight. 2 a.m. 4 hour candle opens up, sells off. We're at a discount below 2 a.m. We zoom in a bit here as well. We can see that 6 a.m. Entices higher from the sell side pull internal range. We then drop down and consolidate below the 6 a.m. open. Also drop to a discount below the 8 a.m. open before expanding higher. 9 a.m. created this long wick and then is pushing higher. So if this was earlier, the time that I wanted to be trading at, then I probably would have just got in here. But we've got 9:30 open right now. If we can drop back down below that bull flag low, ideally with some SMT on the lows or something, then that will be a great place for a long. If it does just want to expand higher from here, then the narrative could still play out because we did still take out this liquidity, even though it was during the ETH, I just prefer to see it happen during the regular trading hours as well. And this represents that swing high on the 15-minute charts, that impulse high. So I'll actually put that over here so you can see it. Let me bring up S&T with ES. So ES beginning to catch up with NASDAQ, expand higher. So we've got trap shorts. Anyone who is shorting throughout this entire range, expecting that leg lower, they're now trapped in, and there's a strong possibility we could continue pushing up from here. But I'm going to be waiting specifically for a long, after engineering a high, enticing shorts, and then a continuation high. Okay, I'm expecting us to potentially draw down to this area. However, we did just have a last second wick on this candle, and now getting some movement back up as well. Well, after having dropped into this nice area for price to bounce. So if we do get a shift right here, this could actually indicate another bullish move up. And that's simply because this is a last second wick, then getting that push following that. So any displacement through this gap, this could easily be a long back up. So yeah, very strong looking closure right there. You could actually quite easily get in long right here if you wanted to, but I'm not looking for a long, but or not just yet at least. It just hasn't quite met what I was looking for. But let's say you get back below this low. If we take out that short-term low there, which we did, we close back above, that becomes a long. 2, 1, that's a long right there. Stop. And we're targeting, see if we can get a new high. We'll go break even at the new high. And that's because we got this as a M1 LSW, which is a, I'll see that, M1 LSW. Last second wick. And also this becomes the M1 IRF Entry. And I'll actually now put another one. I did that because I just want to change the color. I color code them. So pink is for signatures and blue is for entry. I really like that nice long wick we just printed, instantly reversing back up. This could just be us engineering smooth highs and disrespecting bearish order flow as kind of a original consolidation before dropping down and then rallying up. So that's why I haven't actually taken this trade. But it is a signature and entry model that is valid, just the framework isn't in alignment with what I'm looking for. So yeah, just put this risk reward tool on the chart just to see how it does play out. But I don't like how the 5-minute candle did not close above the previous down closing candle. But it is looking like it's got some strength, especially with that closure above that midpoint of that wick. So as soon as it taps this high, it'd be break even. But as you can see, it's actually high resistance here because we made a higher high. So my reasoning for taking the final take profit up here is because of how high resistance has been through the section while leaving these smooth lows the entire way. Also, we're reaching the deepest premium internal range that we can. I always take a partial in these areas, and that's combined with the fact that I believe we're actually enticing people to buy at this point, as well as taking out this buy side. It makes a lot of sense for us to reject from up here. I used this as my TP because it's 77.5, 2.5 points below that 80 level, which you can see we just went 2 ticks above just there. So I anticipate that we're likely to head to that kind of level to both engineer and take liquidity. And so I like to put my TPs just short of those levels. So that was my reasoning behind that. Overall, it's a pretty interesting looking trade, I reckon. I really liked how we had this long wick at the bottom. When I saw that long wick forming, I watched the 15-second charts and I recognized that that entire wick formed in the final 15 seconds of that candle. And so that told me that this was likely an actual rejection. I then observed what we did through this swing high, and because we displaced through it and got speed above it, we didn't just go above it and reject lower, but we actually pushed up through it. Then I was anticipating an impulse rejection failure. So when we then dropped back below that low, and this is the key point, move that over a bit, the fact that we took out this low, you can see that there's 1 tick difference there. Because we took out that low by 1 tick, that means that this was a sell side delivery. Sell side delivery means that we have to have taken out any swing low and created that dealing range from that high to that low, and then traded back high. And the fact that we closed back above that swing high, that was my entry signal. That's why I took that. And because we took out that low, I was expecting price should not come back below that point. So this is my high leveraged entry technique, allowing you to catch pretty high risk reward. So we got a maximum of 6R, with the first TP being at 3.8, just about. And yeah, maximum of 6R on this trade. So yeah, at this point, we could still, it's not really the trade I was looking for anymore. It could still play out because we haven't taken out this buy side pull, which is obviously the previous week high, very significant. If we were to sell off and drop down below this area before heading back up, that'd be great. But I think what jumps out at me today, I seem to delete half these lines, but what jumps out at me is how we had already spent a bunch of time in the pre-market accumulating below this low. So it means that we did do the damage down there, and they might have actually refrained from dropping down there at 9:30 open, because at this point, anyone who looks at the regular trading hour chart only, all they see is support, and it kept on going up. Well, next time it comes down here, I'm going to buy support. So maybe price, especially since it's Monday, is planning on, doing something like that, and then coming down later on. So that could be another possibility. So we didn't get quite what I was after today, but yeah, that's no worries. Like this, you could technically classify this as that same RTH trailed stops model. And that's simply because all that model is we get a gap down, we engineer a high, we entice shorts, and then we get a reversal and we target that the high that was engineered for trailed stops. So anyone who was short overnight, anyone who was short from up here, they're holding into the open, hoping that we sell off. We don't sell off and we rally, and they need a place to trail their stops. So if we go back to ETH, kind of see if you were short overnight and you were short through this entire range and you're waiting for the 9:30 open, 9:30 suddenly has this rally against you and you don't have a stop loss yet. Be like, okay, well, just wait for it to go lower, then I'll put a stop in. It sells off, and then everyone's going to move their stops to the swing high. So recognizing that turn in price and attacking that high, that's what I was able to do using this 1 minute low last second wick. And then that combined with a impulse rejection failure as the entry. You can also see that we did get a 15 seconds impulse rejection, which is just a rejection from a impulsive swing low. So that swing low resulted in, was then followed with this 931 expansion. When we drop below that, we hit it once, hit it again, and then get that fast reversal, leaving that long wick, and then displacing through this swing high. So that speed up through this high, that's very key because we can get this signature. But if we got that signature and then the next candle, just ran above that and poked its head up like that, then it's likely just going to come down again. So that's what gave me the confidence to put on a risk reward tool. I didn't put on a demo trade on my paper trading account because I was waiting for that specific scenario of dropping below this bull flag low, and that just didn't play out today, unfortunately. And yeah, I'm just trying to practice sticking to a game plan and being very specific with my entry techniques. That's the main goal for this week. So this was really good practice to see this live, recognize that this qualified as my model. You also saw me earlier put another risk reward tool on right here, and that was the same kind of technique as this, where you have a shift through a high, it just places above it with speed. So that's telling you that it's likely to take out this high, and this is not just a raid to go short. It then pulls back. It didn't really take out any swing low through here, so that is a bit iffy for the sell side delivery. But then we do get this closure back above, and as you can see, it did go on to make a new high right after that. But as soon as it made that new high right there, it then reversed on me straight away. That's why I wasn't taking that trade, I was just observing. This one was a lot more quality because we had that last second wick, and that showed us real rejection. We had smooth highs up here and reason to go higher, as well as the fact we had just engineered the sell side pull, dropped below it, spent time down there, and then displaced through this high, making this one actually I had a lot more conviction in this. This was more just, it's a pattern, let me see what it does. Just observation. But yeah, I think they'll do for now. I will mark up some charts now, and yeah, try again tomorrow.